But yeah, welcome everyone today to today's annual Academies update from Buzzacott and Stone King. I'm Catherine Patel, a partner with Buzzacott. I'm really delighted to be able to hold this event in person today. I think after a couple of years of holding these remotely, it's really good to see people in the room. So as well as learning from today's speakers, hopefully you'll have a chance to chat to some of your peers, to some of the speakers. There's a couple of networking sessions as we go through the morning. And I think a really good point for everyone to be meeting up as well. There's lots happening in the academy sector at the moment, so regulation-wise, and also as we're coming out the other side of COVID, just about, a number of pressures for trusts at the moment, both on that educational recovery, rapidly rising costs, the pressure on pay, staff recruitment gaps as well. More positively, managing some of the additional funding that's coming through from the ESFA at the moment as well, that wasn't in your budgets, and you're looking at how that can be spent and how you're planning for the future for that. Also, the DfE's white paper, schools bill, sort of setting the government's plans for the next 5 to 10 years, and that will obviously feature quite heavily in the discussions today. So just in terms of the agenda for today, so delighted to welcome today's speakers, both from Stone King and Buzzacott, also to be joined by Stephen Morales, the CEO of the Institute of School Business Leadership. So hopefully bringing a bit of sort of wider sector input into today's discussions. So the initial session will be on the sort of education law update from Stephen and Catherine from Stone King. We'll then move into a financial update from Hugh, and then we'll go back to the legal side of things with an employment update from Catherine Robinson from Stone King. We'll have a little bit of time at the end of each of those sessions for any pressing questions, but we'll also have time at the end in the part 2 session excuse me, for any questions, and obviously part of the networking as well. You can answer and ask any further questions that you may have. We'll have a break around 11:30. There'll be refreshments next door, and then aiming to restart around 11:45, where we go into the more discussion-based section of today's session. We're going to ask you to do a little bit more for this session. That part is not going to be recorded. We're recording the first section, but Chatham House Rules for the second part of the meeting. If you want to raise anything specific to your trust, obviously, that won't go any further than this room. So Catherine Biscoe will host this panel discussion. We'll have the various speakers and also Stephen Morales as part of this, looking at some of the implications of the DfE's recent white paper. And we'd also said Paul Smith, the CEO of Future Academies, would be joining the panel. Unfortunately, he's had the call from Ofsted, so at the last minute won't be able to attend. So we're not blaming COVID, we're going to blame Ofsted for today. But really, during the session, really, if you're all to think about anything you want to raise in relation to your own trusts, really thinking about the implications, whether you're a single academy trust or a smaller or larger multi-academy trust. Really keen to get your input into that. We'll have a handheld mic, so you'll be able to input and join the panel in that discussion. I mean, in terms of the white paper, potentially quite major impacts on the sector. Obviously, the government setting out their intention for full academisation, all schools to be part of a strong trust by 2030, or at least in the process of joining or forming one. Looking at strong trust, so that high quality, inclusive education, focusing on behaviour, special educational needs, educational achievement, very much coming through there. And with this sort of aim that for most maths, they would be of the size of over 7,500 pupils or contain 10 schools. So that's quite a shift from what we have at the moment, with many smaller maths and also single academy trusts as well. And also the move to local authority maths as well. And I know Stephen will cover some of this shortly. But really interesting to share thoughts on how this will develop and the implications for all trusts and the sector. So just before I hand over to Stone King, just a little bit of housekeeping. There are no fire alarm practices planned. If the alarm does sound, the exit is over in the other room, but Buzzacott people will guide you out safely. If I could just a reminder just to put your phones on mute. And just finally on the slides for today, we'll circulate the slides after today's event. There are QR codes dotted around that you can scan and access the slides through those as well. And also, just at the end of today, we have lunch, so do please stay around afterwards, chance to ask any further questions of the speakers, chat to peers from other trusts as well. So really, that was a overall introduction, and I'll now hand over to Stone King for their education law update. Thank you.
Fantastic. Thank you, Catherine. I feel as if I'm missing out not being called Catherine today. We've seen a number of Catherines talking. It's so lovely, as Catherine said, just to be in person. It's when I first did my first webinar as the pandemic got underway, it felt very discombobulating sitting in front of a screen and you haven't got a clue what people are doing. And I did my first seminar after the pandemic back in November of last year, and then it was quite discombobulating seeing people's faces. And so, but it's so lovely to be here in person and to see you all here. And I think this is a major junction in the road we're at. I've been involved with the Academies programme since its very inception, so back in the early 2000s. And for those who've been, sort of watching the system over the course of the years, way back then, it was all about freedom, about autonomy. It was about giving, saying that there's a whole range of rules that apply to maintained schools, but we're not going to make those apply to these particular schools. And if you think about back in the early 2000s, it was about the deep failing schools where they needed a real step change, and about getting people in with a different perspective, a different interpretation, so that they could work within a much looser framework. And then what we've been seeing, with the big change in 2010, when the change of government and this whole thing around academies for all, we then saw, over the years, and I'm sure, no doubt, all of you have been through various iterations of your funding agreements. And every time you take on a new school or something like that, or you want to change your articles, you've got to do a new funding agreement. And every time you look at the funding agreement, it gets a bit deeper, a bit thicker. There's more clauses in there. There are more provisions appearing. But nevertheless, the basis throughout has been a contract between an academy trust as an independent charity and the Department of Education. And you have that contractual nexus, that relationship between the two. And what we're seeing as we're standing here today is a real shift for that. We've talked about this move towards the academisation of the entire sector. I'm sure we'll sort of talk about that later on, just in terms of how we quite think that elements of the white paper might be achieved. But nevertheless, as we're moving towards this academisation of the full sector, what we're seeing then with the schools bill is a real shift from that contractual nexus. So you've got an agreement and you're required under the terms of that agreement to do certain things. And there are certain bits of maintained school legislation, which through the funding agreement or through the Academy Trust Handbook apply to you as an academy trust. But we're moving from that contractual nexus to what is effectively a statutory nexus, just as we have with a maintained school. So, a lot of the provisions that are within the bill and that form part of the Academy Trust Standards, they are all replicating effectively what we have for maintained schools, and then directly applying those to an academy trust. So this, in a way, as I said, we talked about academy freedoms, and that whole concept that you're able to experiment in terms of the way you educate, and greater freedom in terms of maybe sort of how you employ staff at various stages over the course of the years. Those freedoms, I think probably just have to accept now that a lot of those freedoms just have simply gone, and that what we're now seeing is the overall academisation and regulation of the sector, and that effectively we're moving from that local authority basis of control towards more of a central government basis of control in terms of who's overseeing. So from my perspective as a lawyer standing here, this is a big change. It may not feel so much of a change for you at the operational end, because whether it's you've got a contract, the funding agreement that says this is the way you need to operate, or whether you've got legislation that says this is the way you need to operate, ultimately you've got to operate in accordance with the requirements that are imposed on you. I think from a lawyer's point of view, this does feel quite a shift, and it is a definite change in the language and change in the approach. And I think within the schools bill and within the notes that accompany it, there are pains to say that the provisions that we have in place, they're just looking effectively to replicate the provisions that apply at the moment through the funding agreement or through the Academy Trust Handbook. But nevertheless, I think we can expect that there will be, going forward, this then provides a platform for further change, so I think it will be an interesting few years. I think I'd love to open up this debate and this discussion of the panel session after the break. But for now, so what we want to cover off is we identified there in the overview the various aspects around the Academy regulations. Then Catherine Hall is going to cover off the intervention powers and the termination powers given to the Secretary of State, and sort of consider how those intervention, the things are starting to go wrong, how those powers compare to the powers that we've got in place for the moment. And then I'm going to cover off towards the end just specific changes within the schools bill that apply to faith schools and to grammar schools, and then also just touch upon, although very mindful, I think we want to pick this up in more detail in the panel session, the local authority MAT option and what that actually means in terms of the programme as a whole. So, as I say, and without wishing to sort of repeat over what I've just said, but we've got a range of obligations in place at the moment. We've got some legislation that applies to academies, a lot of legislation that is that in terms of funding agreements you are required to comply with, and then we've also got the Academy Trust Handbook. So we've got that range of obligations that Academy Trusts have at the moment, and then we've got the mechanisms by which the DfE can intervene to terminate funding agreements. Things are not going as they should. So going forward, the proposal under the schools bill is that we'll have a group of Academy Trust standards. This document is on the DfE's website. It's well worth looking at if you've not already looked at it. It just gives a nice broad overview with regards to, I think, what the DfE is seeking to achieve, and why they're going about things and the way they're going about things, and how it's all going to work in practice. And what we'll then have is that those standards which will apply under law they will effectively take precedence over the funding agreement. So if you have a clause in the funding agreement that talks about behaviour or entry to school or something like that, school meals or something like that, if there is a similar provision in the regulations or in the standards, then those standards will apply and the provision in the funding agreement will be void. And what they anticipate is that this will lead to a very much slimmer funding agreement. And you can almost imagine the funding agreement to be like a very short document that just sets out the fundamental characteristics of the school, name, age range, location, that sort of thing. And whether it's a selective school, for example, so you might have those basics to be in there, but actually a lot of the meat of the funding agreement that we have at the moment will no longer need to be incorporated within the funding agreement itself. So I think we can expect that there is very much more a very much shorter funding agreement document itself. So then that contractual bit shrinks. You are required to comply with the law going forward. We've said there about Secretary of State to Ofsted in terms of the regulatory authority, and I think the changes do put a significant amount of power with the Secretary of State. So I think it'd be interesting to see sort of how that plays out. It's clear that the standards. Quite sure. Quite sure what I've got on screen. Okay. Sorry. All right. We've got therefore these very broad powers, I think, in terms of being able to set those standards, and a whole range of different areas which will apply under the terms of those standards, which again, as I say, they very largely on the screen there reflect elements of what you would already have within your funding agreement, but they will now apply under the terms of the regulations. And I think part of what the DfE are saying is that by changing this from a contractual basis, which is, and a contract is necessarily a private document, it's between the Academy Trust and the DfE, and there can be variations between those contracts. So you might have a contract with one trust, which will then say something slightly different to the contract with another trust. And in particular, if you've got some clients where they've got really quite old funding agreements where they do say different things, and within some trusts you've got some academies which have got funding agreements from one model, and then they've also got within the same trust funding agreements from a later model. So it's a bit of a piecemeal approach. Whereas what they're saying is that by having the various requirements set out within the standards, then any changes to those standards will be subject to parliamentary scrutiny, and that therefore, if the department wanted, if you like, by stealth to increase powers of intervention or controls or to change something, then that change would be subject to parliamentary scrutiny rather than just by the DfE in maybe a less accountable way, just issuing an updated version of the funding agreement and saying you've got to follow this with effect 1st of April. So they justify elements of the approach by the fact that it's given that great degree of scrutiny in terms of what the requirements applying to academic trusts look like. The regulations set out or proposed are that the standards will not apply and may not be set for grammar school designation, collective worship, and provision of RE, and certain provisions for academies with a with a religious character. Now, the reason for that is that within the bill itself, and we'll cover this in a little while, but there are certain provisions in there that deal with grammar schools and with faith schools. And what we're seeing within the bill is then trying to sort of, there are elements which have just been, by contract or just developed over the course of the year. So I think they're trying to bake in greater protections for example, faith schools in terms of the way they need to operate. So I'd imagine dioceses might be quite happy with elements of the changes that are being made. I'll come on to mixed trust in a minute, or try and do the session after. Catherine, just in terms of what that might mean for those of you who maybe have got one faith school within your trust, for example, and what the implications might be. So that's the broad overview, and that's the scene set, I think, in terms of the bill and the standards. So I'm now going to pass over to Catherine, who's going to run us through the ability for the Secretary of State to intervene if things have started to go wrong and how things have changed.
Thanks, Stephen. So yes, moving on to look at the intervention powers, which will underpin the new standards and regulations that Stephen's just been running through. So the bill does cover some of the intervention powers that you will already be familiar with, but it does also introduce a number of new intervention powers that the Secretary of State can issue to a trust. So currently, intervention by the Secretary of State has largely been restricted to threatened or actual termination of an individual Academies funding agreement through either notices to improve or warning notice procedures, which have traditionally been exercised by the ESFA. The bill, as currently drafted, sees further powers and interventions, which now also include intervention not only at an individual academy level, but also at trust level, such as termination of the master funding agreement, which would lead to an academy trust losing all of its academies rather than intervention at a single academy. And also reintroduces the ability of the Secretary of State to appoint trustees to an academy trust board. The aim of the intervention powers is said to be allowing the government to and the Secretary of State to drive up performance by ensuring they've got further ways and further options on how to intervene with trusts and drive up management and governance if there's any issues within the trust. So we'll move on and look at each of the intervention powers and termination powers individually. So the first proposed new type of intervention that's being introduced through the bill is a compliance direction. This can be introduced, issued by the Secretary of State if the Secretary of State is satisfied that the trust has breached or is likely to breach a duty under a specified law or any of the academy funding agreements or the master funding agreement. Unlike other notices that we'll come on to discuss, there's currently no express provision which would allow a trust to make representations prior to the compliance direction being issued. The compliance direction appears to be intended to remedy specific breaches of obligations rather than broader failures by the trust. So it appears that it would be a bit more limited to individual breaches. Under the bill, compliance direction may also be enforceable by a mandatory order, which would be obtained by the Secretary of State from the court. So there's that additional enforcement power as well. And the second intervention power is the ability of the Secretary of State to issue a notice to improve, which will be more familiar to you. It appears that the notice to improve procedure will be similar to the current notice to improve procedures. However, the ability to issue a notice to improve will now be set out in statute, as Stephen was referring to earlier. The notice to improve can be issued where the Secretary of State is satisfied that the proprietor has breached a duty under any enactment or under any Academy funding agreement. And again, it refers to a master funding agreement now as well, so it broadens that ability. It can also be issued if the Secretary of State is satisfied that there are significant weaknesses in the proprietor's governance procedures or significant weaknesses in the management of any of the academies in its care. These options do appear broader than the options under the compliance direction, covering wider issues. However, the scope of a notice as it stands is that it would be limited to any serious weakness that's been identified by the Secretary of State. As with the current notices to improve, trust would have the opportunity to rectify the failings within a set time frame to the Secretary of State's satisfaction. During the notice period, the Secretary of State can also specify that the trust obtain certain consents for certain actions that the trust may need to undertake to meet the requirements under the notice. And unlike with the compliance direction, the trust will also have the opportunity to make representations before the notice to improve is issued. If the notice to improve isn't complied with and doesn't meet the Secretary of State's standards, then they have a number of options by which they can intervene, which again will be set out in statute. One option is they can appoint trustees, which we'll come on to discuss again in a few slides. They can also terminate the funding agreement if they don't consider the notice is satisfactorily being met. And they can also terminate the funding agreement if they don't consider that the necessary consents have been obtained under the notice. So moving on to look at the termination warning notices. So this is the third type of intervention that's set out under the bill, and again should be another familiar power, which is the ability of the Secretary of State to issue a termination warning notice. Under the bill, this can be issued for a broad range of reasons, including where a school is causing concern, and it's quite similar wording to what we currently know a termination warning notice could be issued for. And it includes failures such as failures in leadership and management, any failures in people standards, and also concerns over people safety. They can also be issued for any breaches of funding agreement or any breaches of articles or the Academy Trust Handbook. And as you're aware, that would also lead to a breach of the funding agreement. The bill also widens when a termination warning notice can be issued, as a notice could also now be issued where an academy is considered to be coasting. So again, widening the intervention powers of the Secretary of State. A termination warning notice can also be issued in relation to a master funding agreement, which would affect all of the academies in the trust. And it can be issued on the same grounds as we've discussed for supplemental or single funding agreements, but it could not be issued due to any issues surrounding pupil standards at an academy or where an academy is considered to be coasting. So those grounds are limited just to the individual academy funding agreement. As with a notice to improve, a termination warning notice will give specified actions to be completed within a specific time frame before termination takes place. And a termination warning notice can also be issued following a compliance direction being issued or notice to improve, when the Secretary of State does not consider that the trust has satisfactorily met the requirements under those notices. So that will link in to the new intervention powers as well. And further power has been introduced into the bill, and that's power that may be familiar to some of you if you were on older articles, and that's the ability for the Secretary of State to appoint trustees in a trust board, which was a provision if your model articles were from around 2011 or older model articles. There was the provision under those articles for the Secretary of State to flood the board if they wanted to intervene with the trust. The newer model articles did remove that ability, but we're now seeing that power being brought back in. So the Secretary of State can issue an interim trustee notice, either to appoint or require the appointment of trustees into an Academy Trust Board, where the Secretary of State considers that there has been a serious breakdown in governance procedures or the management of the trust, or where they're concerned over any issues of surrounding safety of pupils or staff, and they don't consider that that's been adequately addressed and dealt with. They can also issue an interim trustee notice where the trust has previously received a notice to improve, and the Secretary of State considers that they failed to satisfactorily meet the requirements as set out in the notice. So, as I said earlier, that is very much returning to a position that we saw several years ago under the articles, and they're looking to now reintroduce. It may also be similar to the structure, if you've been familiar with a local authority appointing an interim executive board at a maintained school. In this situation, the DfE, the Department for Education, have said that they will pay for the trustees that it assigns to the trust. This won't be in breach of any of the provisions of the trust articles, as whilst there's an interim trustee notice in place. Any of the articles that relate to the member or the trustee composition or the appointment of the trustees will be overruled during the period of the notice. And moving on just to the termination powers then that link into each of the notices as well that have been improved. Other terminations powers that already exist under funding agreements will also now be set out in statute. So the option for either party to terminate their funding agreement on 7 years' notice, either at the request of the Secretary of State or the request of the Academy Trust, that will now be set out in legislation. And also where there's an insolvency event, there can also be the termination of the funding agreement under that. So as referred to earlier, any of the failures to comply with any of the new intervention powers that are set out or under legislation, if the Secretary of State has issued the notice and considers the Secretary of State hasn't met the standards under those notices, then the funding agreement either for the individual academy or the master funding agreement for the MAT itself could be terminated. So it's very much widened the intervention powers of the Secretary of State and their ability to terminate the funding agreements as required. So I'll head back to Stephen to discuss the schools of religious characters and primary school.
Thank you, Catherine. Okay, so as far as the schools or faith schools, so over the years there have been various sort of conversations and with the Church of England, the Catholic Education Service, just with regard to the the extent to which there's any loss of control of power on the part of the diocese or on the part of an order if a Catholic order, say, wants a school to become an academy. And there have been various provisions incorporated within model articles of association, the funding agreement, the lease, if there's a lease entered into for those schools. And I think underlying it, there's that, and I think over the course of the years also we've seen the concept of a mixed map. So maybe you've got one faith school in a much broader secular map, for example. And throughout that process and over the many years, I think there have been various concerns expressed by dioceses with regard to, particularly say one of their schools is joining a broader secular mat. They're losing an element of control. It's no longer the diocese in direct operational control of that school, or being able, sort of having the ability to appoint people on and off the governing body. It's now within a much broader mat. So what the schools bill is seeking to do is to include a range of provisions that will seek to bake into law those protections, those fundamental characteristics of a school, of a faith school. And in particular, the schools bill is looking to introduce provisions with regard to, for example, worship. It is building provisions also with regard to RE, provision of RE within both faith schools and non-faith schools, but also with regard to governance. And there are two sections of the bill that refer to governance. And one is if you've got a school which has got a trust which has got a majority of schools which are voluntary aided schools, so those are the ones with the 50% plus control exercised by the diocese with regard to appointments on the board. And in those cases, regulations must be made that will deal with governance with the aim of preserving the character of each individual academy. But there are also the power to make provisions, so regulations may be made for those trusts which may have got a voluntary controlled school, so one of the 25% model where the diocese historically has only been able to appoint a minority of the governance onto the board, and those regulations, those would incorporate, for example, the composition of the board, how many people would need to be appointed by the diocese, whether the chair and the vice chair, for example, trust would also need to be need to have a particular faith characteristic, or be appointed by the diocese concerned. So there are further provisions which I think, in very broad terms, are going to strengthen the position of the church, if you like, in that broader sense, with regard to faith schools. So I think that's one just to watch out for. And if you are a mixed trust or a faith trust, you are entirely comprised of faith schools. I think that's something to look at quite carefully. The next specific change is just around grammar schools, and for those grammar schools in the room, there are, as you'll be aware, there are provisions that apply within your funding agreement with regard to the selective nature of the school, and under the terms of the funding agreement, build in the requirements that would otherwise apply to you in terms of operating a selective academy, but also being able to give, for example, parents the right to run a ballot to see whether or not they wish to continue as a selective academy. Going forward, and in very broad terms, those provisions that would have applied under the terms of your funding agreement are now going to apply within the provisions of the schools bill, the Schools Act once it's in force. So that means that, again, I think the intention is to replicate the position that would apply for a maintained school at the moment for an academy school going forward. So I think, again, probably around the edges, depending upon the age of your funding agreements and the provisions, there may well be certain changes there, but I think the main thrust of that is to ensure that the provisions that would apply within your existing funding agreement will continue to apply, but under statute. And then I'm conscious of time, and probably conscious also that we'll probably pick up on this, won't you, Stephen? I think a bit later on in terms of local authority matters. Yeah. But I think probably suffice to say for now, there has been a fair bit of conversation over the years with regard to whether a local authority can sponsor a MAT. And generally, people step back from the edge and say, no, we're not going to do that. But within the schools bill, there are now proposed to be powers for local authorities to establish MATs. And I think I think in terms of local authorities, I think the proposal is that they would effectively be able to apply for an order for a school. So historically, as you'll appreciate, the position generally has been that if you've got a perfectly functioning school, it's for the governing body of that school to apply for the order. Whereas under the terms of the bill, they're now proposing that actually the local authority would be able to apply for an order, unless we're talking about a foundation school where there's a separate group of trustees who hold the land, in which event any application for an order would need to be made with their consent. So this may well be the way in which the department thinks that they'll be able to mop up all schools. If you've got some recalcitrant schools who really don't want to become academies, whether this is the route that they will follow. But I think it's a pretty profound power, and I think it's one that I'd very much like to pick up later on in the panel session, if that's okay. So that's a very brief rattle through the bill. We could spend a whole day, I think, going through it and examining it, but it's a moment of, as I said at the beginning, it does feel like we're at, this does mark a significant change in the way that academies and their relationship with the Department of Education and government more broadly will be conducted going forward. But it's a bill and it needs to get through Parliament and needs to get through the Lords as well. So let's see what happens over the course of the forthcoming months. And I'm sure Steve will have more to share with us about that. So that's us. Now, I think we've got a chance for questions now. So
just want to clarify, I think you mentioned costing. I've read your briefing paper on your website as well. Is that defined in the bill itself what costing means? Does that mean people going from requires improvement to good to satisfactory to good to highly satisfactory? Is that defined anywhere, or is it just one of these government things where they're using description without any definition of it?
It's not defined in the bill. I think it's still in guidance.
So it's subject to the approval of the Secretary of State.
yeah.
The other thing is, can you pay trust? How are they going to pay trustee directors of an academy trust, which is an exempt charity? Normally, a charity you can't. I know that the charities bill Austria.
Yeah, no.
I was thinking the charities bill coming through. It's a various thing, but I don't think it quite. It was more a trustee being accounted up and helping out. It was that kind of thing rather than.
Yeah. No, I've not got on my charity soapbox this morning, but I could. Just in terms of how this degree of regulation, this degree of control, is really an anathema to charity law. And I think were these things not statutory charities under the terms of the Academies Act, they wouldn't. The charities would never accept them because you just don't have anywhere near the degree of autonomy that would be required. So I think then to add, as you say, this whole idea of paid trustees, it does go right to the heart of the charity question. And the bit, just to throw the idea out there, and I'm in a room full of accountants, so I'm going to be quite careful on what I say, but I'm just mindful of the fact that HMRC will apply a test for charity, which may not necessarily be the same as the Academies Act or the Charities Act. So I do just wonder whether, with the provisions like you've got a paid board. I mean, there are you just wouldn't expect to have. You might, for academies, you've always, well, the model has typically been you have the chief exec, we have the head teacher on the board, and for the older ones, we have the staff governors as well on board as well. But that was always an exception to the rule, but it was always a minority, and if you know your articles of association, it probably says no more than a third should be paid. Well, all of that kind of goes out the window, and by having a majority being able to be paid, it then feels like, well, actually, is this an entity which is entirely focused upon the delivery of education, or is it also, if you've got a paid board, what is it also to provide benefits to that paid board? So I think it does raise some really interesting questions. But we can maybe pick up that again in the panel session, because I'd love to spend a bit more time talking about those aspects.
Yes, my question was about the removal of the 19.5% local authority associated person members. Does that apply just for local authority maps or to all trusts?
I think that just applies to local authority maps, doesn't it? Yeah, yeah.
Still not allowed to go to the trust unless you change your office.
Yeah. So that still applies. So, yeah. It's just obviously if you've got a local authority mapped, then it's going to be subject to a greater degree of influence. And the reasons obviously for those provisions is to ensure that you don't have to account for the trust as if it's part of the local authority. I suppose if you've got a local authority map, by definition, it's probably part of the local authority, so that goes out. So, any further?
You just mentioned staff governance.
Yeah.
Is there anything in there about new about staff governance? Our internal auditor said we should get rid of our staff governor, and our FGB say we want to keep them. Is there anything specific direction on that?
There's no specific direction that I've seen so far anyway. I mean, there may be sort of devil may be in the detail, but I think obviously the preference for a number of years has been not to have staff governors, or to try and limit the number of staff governors. But we've got other cases. We've got cases that
still a preference, just a direction.
Yeah, it's still possible to do it. But I think they very much like not to have staff involved as we can. But I'm not aware that there's anything at the moment anyway in terms of the regulations that would restrict that. Any further questions? Great. Okay. Well, thank you so much for that. We'll be around at the break, but as I say, I'm really looking forward to the panel session after the break. So I'm passing over to you now. You are. So great. I'm going to leave you in Hugh's capable hands.
Thanks, Stephen. Now we've got the financial update. It's actually been a relatively quiet year on the financial side this year. So we've got no new underlying financial reporting standards to deal with. The charity SORP that the Academy Accounts Direction is based on hasn't changed. It's not going to change for a few years yet. Auditing standards also very stable this year. You remember previously we had the new standards around things like going concern. Got new standards coming up next year, which are more around sort of the auditor understanding the sort of IT environment and that feeds into internal controls and financial reporting, that kind of thing. But nothing this year. We've got a good year this year from that point of view. So really, the main things I'm going to focus on today, the updates coming on from the Academy's Accounts Direction. It's not an overhaul, it's not a huge change in the Accounts Direction, but there's some really important things within it to cover. So I'm going to start off by covering that. So starting off with the Trustees Report and Governance Statement, there's only one significant change in the Trustees Report side, and that's talking about the details of the organisational structure, and particularly to include subsidiaries, joint ventures and associates in that. We don't see too many joint ventures and associate companies with Academy Trust. It's really for those of you who've got sort of trading subsidiary, that kind of thing. This used to be primarily sort of covered within the sort of connected organisations bit of the Trustees Report. So there's potentially some overlap with that now in having it in this section, but they're wanting more detail basically. So if you've got a subsidiary, it asks you to include details of its primary function and how the subsidiary relates to the Academy Trust. trying to interpret what that means. I think what they're sort of getting at is if you look at some of the ESFA investigation reports they've got online, there's often in quite a lot of them a subsidiary or connected entity involved, which has basically caused problems for compliance and governance and regularity. So I think they really just want to explain how does this, you know, because if it's not just a sort of lettings organisation, some academies a bit more entrepreneurial perhaps with things, how does this relate to the Academy Trust and what you're doing? On the governance statement, the first thing is they've given an update on things that they're seeing academies not completing so well in the financial statements that they're reviewing, and so they're highlighting those. So the first things aren't new things in the governance statement, they're just things that the ESFA really emphasising because they've reviewed financial statements and they don't think they've done as well as they could be. And the first thing is on governance reviews. It's something they're really sort of pushing at the moment, and it's expanded a lot in recent years within the governance statement. So they're saying that the self-assessment of governance is best practice to happen annually. So that's looking at things like, you know, sort of self-review of the effectiveness of governance, the skill set of the governing body, those kind of factors, and the independent governance review. So having it sort of done externally is something that Academy Trust should look at routinely. I don't know what routinely means, maybe every 3 years, that kind of thing. It doesn't define it, but it does say that, you know, you should be describing the kind of evaluation process you've been through, what were the sort of key findings coming out of that, and when's your next self-evaluation or external review going to happen. So I think they're wanting more information basically on this. I don't think it needs to be about war and peace, but I think in your governance statement you should have a separate heading for governance reviews and a couple of paragraphs below that to explain a bit more about what you've done on that. The other area is there's this requirement that if you've had less than 6 board meetings in the year, you must explain how you've still achieved effective governance with less than 6 board meetings. That does happen with quite a few Academy Trusts. If you've got a very comprehensive subcommittee structure, you know, with finance, audit committee, etc., there's lots of meetings going on in the year, but below sort of board level, if you like. So I think if that's the case, it's a sort of must requirement that you've got to explain how you that that's in place and that you still achieved effective governance with that level of meetings. So those are the kind of existing requirements that they're highlighting. One new requirement is around conflicts of interest. So you've got to explain how you're sort of managing conflicts of interest as a trust. In the model Cape Town accounts, it gives some examples of what you might talk about. It starts off with talking about things like declarations of interest, which all Academy Trusts will have for governors and senior management. I think it wants to go further than that. So it talks about how this is used in the day-to-day sort of management and governance of the trust. So I think that's sort of saying, you know, it's all very well having declarations of interest, but that doesn't itself manage conflicts of interest. You've got to have a policy, you know, finance, staff, budget holders have got to be aware of who's on those declarations of interest and who they might transact with, those kind of issues. It also, again, is coming back to the point on subsidiaries and saying how you're managing conflicts of interest within subsidiaries. Again, that's something that's come up a lot in their investigation reports that you can see online. So they're keen to push that point. So that's the trustees report and the governance statement. What about the financial statements and the notes to the accounts? Starts off with the staff costs area, which is an area with just continually more and more disclosure within the financial statements and the annual accounts return. So the extra bit this year is on severance payments. So just to give the context, in the notes to the accounts, you've got to give a lot of detail on staff costs. You break down the sort of wages and salaries, pensions, etc. And then you've got to give a line for any staff restructuring costs, which they break down between 3 areas, which is sort of redundancy, severance, and other. And for other, they give examples like sort of pension payments or people leaving, like pension strain, that kind of thing. And the new bits on the severance side. So in previous accounts directions, we've always had this requirement, which is on the right of the side, the second one there, about non-statutory, non-contractual severance payments, where you've got to disclose the amounts individually, as is shown on the screen there. So that's still in place. The only difference now is they've got a new terminology. So they term those to be special staff severance payments if they're non-contractual and non-statutory. The new requirement is the top part of that, which is all severance payments have to be disclosed, but in banding. So you've got to say how many you've got in these different bands. But that's a slightly different definition. It's not just the non-contractual elements. It's just any severance payments, whether it's contractual or not. So extra disclosures, and they apply to more academy trusts because it includes the contractual elements in there as well. The next new item is around any sort of PFI buildings. So this is only a sort of minority of academies have this, but if you've got a building that's been financed under a PFI arrangement, they sort of term it service concession contract, which just means that there's an agreement between the local authority and a private company to construct the building. Often these buildings don't go on the Academy's balance sheet, but there's a lot of disclosures in the notes to the accounts to explain the arrangements and the financial commitments that the Academy Trust has under this. And so there's, for the last couple of years, been quite a lot of guidance within the accounts direction on this and whether they should go on your balance sheet or not, and what sort of factors contribute to whether the building should go on the balance sheet or not. The new bit in this year's accounts direction, they just want more narrative disclosure. So if you've got a Buzzacott set of accounts, you've probably already got some detailed narratives disclosures under the sort of talk about PFI arrangements, but there's more specifics now about what they want you to include. So you may need to update those disclosures. So the example disclosures that talks about the fact there's a PFI contract between the local authority and the company that's constructed the building, and the Academy Trust not party to that contract, but there's a supporting agreement between the Academy Trust and the local authority, which creates a financial commitment. That financial commitment's disclosed, and that's for things like catering, cleaning, repairs, etc. So it's wanting more explanation in the notes to the accounts for the PFI arrangement. The next one is an update, but it's the same theory we've had previously. So this is on Priority Schools Building Programme, where you've got a new building basically being built by the department. And these are sort of scenarios where your cash isn't going through the Academy Trust, so it goes straight from the department to the contractor. And so it's what you put on your balance sheet. And this is just giving guidance that sort of really reconfirms that you capitalise it once the building's sort of brought into use and handed over to the Academy Trust on your balance sheet. So there's no real change. It's just sort of referring to the new Priority Schools Building Programme in that context. Business rates is affecting quite a lot of Academy Trusts this year. So depending on which local authority you're in, so this will affect some and not others, the business rates may be being paid directly from the department through to the local authority, and the cash won't go through the Academy Trust. But from an accounting perspective, just because the cash isn't going through the Academy Trust doesn't mean you're not being funded for those business rates. You're still getting the benefit of that. So from an accounting perspective, the accounts direction is saying you've still got to account for that. So you've got to do a journal entry, credit your ESFA income and debit your business rates cost to account for that. So quite a straightforward journal entry to make, but one, obviously it's not sort of prompted by anything, so you've got to remember to make it for the year end. And the one sort of thing that we've heard is that some people are still seeing the invoices around this and know what the amount to put on that journal entry is, but there's a risk that obviously you won't see the detail of that, so you've got to sort of prepare for the year and make sure that you know what number to put through that journal. And the last item in the financial statements bit is on teaching schools. So I'm sure everyone's familiar that we've changed in sort of the old teaching schools to the teaching school hub model now. It's a much smaller number now. We've got of the teaching school hubs. So one consequence of that is the teaching school training accounts that used to go in the back of the financial statements if you had a teaching school is gone. But still in the statement of financial activities, you've still got, if you've got a teaching school hub, have the income and the expenditure on a separate line in the statement of financial activities, and that flows through into the notes to the accounts. But actually, they've given a lot more clarification around this area, which they didn't have. It was very ambiguous in previous versions of the accounts direction. What they're saying is that the Teaching School Hub is an example of one of these scenarios, but also if you've got a SCIT or a maths hub or an English hub, that kind of thing, they've also got to follow the same theory. So they've got to be separated out in the statement of financial activities and within the notes to the accounts. So there may be trusts, because of the sort of ambiguity of the previous accounts directions, that have, say, a maths hub, but didn't have it separated out on the statement of financial activities and in the notes to the accounts. So now, because they brought that clarity to it this year, that will have to happen in the accounts. So it could be updating for some people's accounts. The other slight complication on this is within the notes to the account. So what you've got, one of the areas you've got is expenditure, and you've got to disclose the expenditure for the Teaching School Hub or the SCIT or the Maths Hub, whatever it is. But the way it presents it has the direct costs and then the support costs. And the support costs note within the model accounts, which sort of details, all the support cost, depreciation, premises, IT, all of this. That's now split on a column base with the, one column for Teaching School Hub, one for sort of just the other academy support costs. So you have to come up with a methodology for allocating support costs between your SCIT or your Teaching School Hub and your general academy activity, if it's material, obviously, to the financial statements to do so. So that's something that we need a little bit of preparation, perhaps in advance of the year, and to sort of identify what an appropriate methodology of allocating that out is if you have any of those things. The last bit of the guidance, you probably remember the accounts direction was split into 3 last year. It's the same this year. So you've got the accounts direction, the model Hope Town accounts, and then you've got this guidance for auditors. So yeah, this is really for us when we're carrying out the audit. It's worth knowing what's within there. The first thing was about the consequences of the change from the Academy Financial Handbook to the Academy Trust Handbook. And I suppose the fear was here that because the Trust Handbook's broadened things out, sort of talking more about safeguarding estates, GEMS, the good estates management in schools, all of that, is that going to broaden out the scope of the regularity work or any of the audit work? Basically, it's not. That's the good news. So it's the same as last year. That broadening of scope of the Trust Handbook isn't really affecting the core audit work. They highlight within it what are the common things that the ESFA is seeing coming through in regularity reports, so the issues that have been raised in regularity audit reports. It's pretty similar things to what we've seen in previous years, so it's things like the requirements around management accounts going monthly to board that includes balance sheet. It's things like issues on financial management, governance, compliance issues, which are often breaches of these must requirements within the Trust Handbook, and related parties. And they've given quite a lot of detail on related parties, so it shows there's still an area they're really focusing on. So they're talking about things that cause regularity issues because trusts haven't followed their own procurement policy when entering into a related party transaction, or perhaps they've entered into one and haven't reported it to the ESFA until after the start of the contract with the related party, or that the documentation is just not there in terms of demonstrating the accountability around this. So they're sort of, I suppose they're sort of encouraging auditors to keep focusing on that area. Subsidiaries, again, another running theme. This year, they're highlighting that subsidiaries are within regularity reporting, so they do need to be considered from a regularity perspective. But they're also highlighting that the Academy Trust Handbook doesn't apply directly to the subsidiary, it applies to the Academy Trust, so the auditor can factor that in. That doesn't mean, in a sense, that the subsidiary is outside of the financial handbook, because obviously it's controlled by the Academy Trust, so the Academy Trust has to follow the handbook and is responsible for things that go on in the subsidiary. It just means there's less compliance that the subsidiary itself and its own governance has to comply with. And finally, on the section, the COVID supplementary bulletins. You may remember last year there was, because of COVID, there was a supplementary bulletin which stood alongside the accounts direction, which gave guidance on the Trustees report and how to cover issues coming out of COVID in that, and notes to the accounts. It's separated out, sort of catch up premium, those kind of additional income streams. There's no new guidance for this year, but they've said that last year's guidance sort of remains in force. So you've still got to follow the COVID update bulletin. However, obviously the context has slightly changed this year. We've got different sort of funding streams. This year we've got obviously a different operational issues coming out of COVID to talk about in the Trustees report and financial reviews. The context has changed, but the underlying requirements haven't. So that was everything on the accounts direction. Just the final thing I wanted to talk about before I finish was reserves. So this is sort of perennial, I don't know, issue debate in the academy sector. You know, how much reserve should academies be holding? You know, some academies holding too much reserves that could be spent on today's pupils. And, you know, how do academies get an appropriate level of reserves? Because ultimately you're a separate legal entity and you've got to protect the future of the Academy Trust. What's an appropriate level of reserves to be holding? The NAO did a review which covered a whole range of things, but one of the things they picked up on was reserves in the academy sector. So they said a sizable minority of Academy Trusts are building up substantial reserves, which obviously is a bit of a headline grabbing thing, because people don't like the idea that there's unspent money sitting there that could be spent on the pupils in the school. So the ESFA sort of started to respond to that, and you're seeing I'm sure you've already seen in the BFR this year, if there's more than 20% of your reserves, your revenue reserves, more than 20% of total income, there's additional questions in the BFR this year. So it's asking things like, basically, what are you holding these for? Is it sort of future growth, capital, spend, etc. As far as we're aware, that's as far as they've got so far in terms of their questioning it rather than doing anything further. But the ESFA has given some reporting around the level of reserves that they're seeing in Academy Trust, and they're saying in 2020-21 the average was 12.9% of total income. So just thinking what that equates to, is this often people sort of, it's not a sort of a hard and fast rule, but a lot of academies think, oh, you've got to have at least 1 month payroll in reserves, an absolute minimum. Some have less than that. That's just a common thing, and that equates to about 6%. So we're sort of saying on average it's about 2 months payroll, basically, is what we're seeing out there. So it kind of makes sense that people are saying that as a minimum. Some are holding more. A 12.9% average. We're seeing this also. There's the Buzzacott benchmarking reports. Last year's data is online, so you can just get that from our website if you're interested to look at that benchmarking data. That's got quite a lot of reserves. Shows a similar picture. It also shows the reserves as a proportion of income tend to be higher in single academy trust than larger MATs. That's sort of logical, because I suppose a larger MAT can spread its risk more. The odds on like all the schools in the MAT kind of having adverse budget variances is much less likely than in a one-off bad year for an individual school. So all of this, I think, is just put extra focus on reserves ultimately. So I think when you're sort of looking at your financial statements, you've got to put in your reserves policy in your trustees report. No changes to the requirements around that, but it's important that that's given a lot of focus this year because of the extra focus from the ESFA on this. So you've got to explain the level of reserves that you think is appropriate to hold, so whether it's an amount or a range of reserves, and why you think that's the appropriate amount, and then explain how your actual reserves that you've got compare to your policy, basically. So if you are holding more reserves and you think you need to hold, what is the plans for doing that? So I think that's coming under more scrutiny, important to look at. If you are in the sort of process of updating your reserves policy, again, we've got guidance that we issued last year on, which is again available on the website, around setting reserves policies for Academy Trust, and that looks at also some of the sort of trends that we're seeing at the moment around reserves pooling in multi-academy trusts is becoming much more common. We're also seeing sort of gag pooling being taken up more in recent times for a lot of academy trusts. So gag pooling has been an option for academy trusts for years and years, but We haven't seen much take up of it at all until recent times. We are seeing a little bit more take up of that. Just to, if you're not familiar with the difference, reserves pooling is about the money that you've got left over at the end of the year, pooling that together, so it sort of belongs to the trust, if you like, and then gets allocated by the trust. Gag pooling is sort of pooling the money as it comes in, as you receive it, and then deciding how that's split between the academy. So it's effectively the academy trust setting its own funding formula rather than relying on the state funding formula. But I think it's sort of a combination of this. You know, initially there was a lot of resistance to this. You can imagine, you know, if you're a head teacher of a school that's got its more substantial reserves, you know, reserves pooling, gag pooling doesn't sound attractive. But I think over the years it's become a little bit more attractive for academy trusts. They've evolved and have a sort of one trust approach, and we're also seeing that sort of finance functions are getting more sophisticated to be able to operate these gag pooling models on a fair and transparent basis as well. So we are seeing sort of a little bit more take up of that. That's everything I wanted to cover on the finance update. I've got a second for any burning questions now. We can cover in the break or later on if anyone's got. Otherwise, I will hand over to cover a question there. One back there. Question there.
Can I just ask a question about related parties? So when I'm in guidance, it says that it's trustees and members that related parties are related to. But I have had an internal scrutiny and they're saying that our chair of the governing body should be included in that. Is that the case? Because to me, that isn't a related party according to the ESF.
Yeah, so the related party rules essentially follow the underlying financial reporting standards. So it is sort of that sort of significant control is the sort of terminology. So it's sort of members, trustees, senior management as well. So key management personnel will come into related parties. So there's a difference between sort of related parties and conflicts of interest. So you could well see other people within the trust having a significant conflict of interest in this scenario. So your policies and procedures should capture the risk of conflicts of interest through local governing body members. However, it's unlikely that's going to constitute a related party from a financial reporting standards point of view, which then the ESFA follow from their terminology as well. So yeah, you have to think about both things, but I don't think that'll be a related party. Lisa.
The big training pieces
not happening yet. So I think you're referring to the change in international financial reporting standards that will at some point come into the UK financial reporting standards. That means that operating leases essentially will come onto the balance sheet, similar to finance leases. So that still will happen, but we're still, I don't know exactly the implementation date, we're still at least a couple of years off that, I think. You have to worry about that quite yet. Brilliant. I'll stop there and hand over to Kathleen, but happy to answer anything else. Frank?
So hi everyone, I'm Catherine Robinson. I'm an employment solicitor at Stone King, and so today I'm going to be doing kind of employment law update and kind of looking what's on the horizon for employment law and kind of recent changes we've noticed. So here we've just got an overview of the slides that I'll be speaking about today. So my first slide is about the employment bill. So in the Queen's speech in 2019, the government announced that they would be introducing the employment bill, and you can kind of see here the key reforms that were proposed. We've not really heard anything about it since then, and we were expecting to hear something in the Queen's speech this year, but it wasn't mentioned. I do know that the government announced recently that these reforms kind of will be introduced when parliamentary time allows. I'm just going to speak about a couple of the reforms, but I don't kind of intend to go into detail in each one. But the first one is flexible working. So I think that's a bit of a hot topic at the moment in education. So at the moment, employees with 26 weeks continuous service have the right to make a flexible working request. There's a statutory regime which applies, so they can make one flexible working request every 12 months. There's a 3-month then decision period for the employer to basically kind of consider that request, discuss it with the employee, and then notify them of an outcome. There are 8 business reasons under the statutory regime which an employer can rely upon, basically to reject a request. And there are some kind of conditions for employees to comply with when they make the request, so it kind of has to be dated in writing and kind of state that they're doing this in line with the regime. So the government are proposing to make some changes here. So first of all, to make the right to request flexible working a day one right. So as soon as they start employment, they can then make this request under the statutory regime, and the employer will have to consider it and comply with that in accordance with kind of the 3-month decision period. Although it is kind of possible that there may be some further changes, potentially to the kind of the business reasons that they can rely upon. I think as well, employers will be encouraged in circumstances where they can't accommodate the request, rather than kind of giving a flat out refusal, to say, actually, kind of, here are some alternative arrangements, and it becomes more of a discussion rather than, no, we can't do this, and you're just going to kind of keep doing the normal working pattern that you're doing. And I think as well, employers are going to be encouraged to kind of raise awareness of this right, so kind of make sure that they have a policy in place and make sure that their employees are aware of that policy. The next reform relates to redundancy protection, so the right to be offered suitable alternative employment. So at the moment, this covers employees on maternity leave, adoption leave and shared parental leave. Government are proposing to extend this protection to pregnant employees from the date that they've notified their employer of their pregnancy to 6 months after they've come back from maternity leave, and there'll be similar provisions for those employees taking adoption leave and shared parental leave. And so, kind of going to the slide here, I'm not going to go into much detail on the rest of them, but other kind of key reforms are the right for workers to request a more predictable and stable contract after 26 weeks service, the introduction of a single labour market enforcement agency responsible for enforcing basic rights for vulnerable workers, and then we've also got some new rights for statutory leave. It's not on the slide, it's not kind of part of the employment bill, but there has been a recent consultation around workplace sexual harassment, and the government is proposing to introduce a new duty for employers to prevent sexual harassment in the workplace, and this will extend to sexual harassment kind of committed by third parties in the workplace. So there will be some changes there which you'll kind of need to look out for. But another kind of key thing that the government are looking at are the time limits under which employees can bring a claim under the Equality Act. So, for example, kind of discrimination, harassment, victimisation. At the moment, the time limit to bring that claim is 3 months from the date of the discriminatory treatment, but the government are looking to extend that to 6 months. So that is potentially on the horizon there. My next slide is on reporting. As I'm sure you all know, so large employers with over 250 employees are required to report their gender pay gaps. I think these regulations were introduced around 5 years ago. I believe that the government will be reviewing the regulations, kind of see if any kind of changes should be introduced. I think one of the possible changes that we could see is an introduction of sanctions, so for non-compliance, possibly financial penalties. It's unclear, but I think at the moment, kind of if an employer doesn't comply with the mandatory requirement, there's no enforcement action, there are no sanctions available, so it's possible that that may change. Ethnicity pay gap reporting, so this isn't currently mandatory, it is voluntary, and I think it is becoming more common that employers are reporting these pay gaps. So I think in 2017 in Theresa May's manifesto, she did pledge that she would introduce a mandatory requirement to report this pay gap for large employers. We haven't seen this yet. I think there are kind of some reasons around this that the government kind of want to work on before we work towards making this mandatory. But they will be publishing guidance in this summer, so we're expecting to see that very soon, which will kind of help employers publish their ethnicity pay gaps, kind of provide case studies, how do you collect the data, kind of how should the information be presented. I think hopefully it will also specifically look at kind of collecting this data, because I think that is one of the issues that the government has identified, that employers don't kind of have the data that they necessarily need in order to accurately report these pay gaps. So I would look out for that guidance, which is coming in this summer, but I do expect that this will become mandatory in the future. And so a quick slide here on holiday pay. I'm sure we're all aware of the Harper Trust and Brazel case. The Trust appealed the Court of Appeal's decision, and that was heard by the Supreme Court in November of last year. The Supreme Court hasn't published their judgment yet, so we're still waiting to hear on that. It is typical in the Supreme Court for judgments to be published within 3 to 9 months, so we are kind of expecting this judgment imminently, if not now, kind of within the next 3 months or kind of fairly soon after that. We are seeing some claims already with our clients, so the unions are kind of issuing claims for unpaid holiday pay, less favourable treatment on the grounds of part-time worker status. It's quite kind of inconsistent with how the tribunal are handling these claims at the moment. So some employers are being required to submit their defences now, whereas other employment tribunals have stayed the proceedings pending the Supreme Court judgment. But it is possible that we may kind of see more of those claims, kind of particularly depending on what the Supreme Court kind of decides when that judgment is published. So I think it's obviously key for Academy Trusts kind of do risk assessments. Are there any kind of liabilities there? And as soon as the judgment is published, we'll of course be doing an update on that, how to assist Academy Trusts. So I've got a few slides on COVID. So obviously been quite a few changes recently. So from the 1st of April this year, there was the end of free testing. There's also been a change to risk assessment requirements for employers. So you are no longer required to consider COVID-19 explicitly in your risk assessments, although it is very much still considered prudent to do so. So I would recommend that you do continue to consider it. There's also been a change to the guidance. So quite a lot of the government's guidance has been withdrawn and replaced with new guidance. So you'll see on the slide, the working safely guidance was replaced, and the new guidance is called Reducing the Spread of Respiratory Infections, including COVID-19 in the workplace. And there's kind of similar guidance available to the general public. But as you can kind of see, the shift is moving away from kind of focusing solely on COVID-19 and actually kind of looking at respiratory infections as a whole. In the kind of the new guidance for employers, the measures are kind of the typical ones that we've already seen. So encouraging vaccinations within the workplace, kind of good ventilation, clean workspaces. And it does say, so for kind of people who either feel unwell, kind of have symptoms of COVID, or even receive a positive test result, the guidance is still kind of try and work from home if you can. But it does say that if you're unable to work from home, to kind of speak with your employer, work out kind of suitable arrangements. So the responsibility is very much kind of shifted to employers, employees, and they have to kind of work between themselves on how best to deal with that. So my next slide, looking at potential liability issues relating to COVID. So I would definitely be interested to speak with some of you, possibly in the Q&A session at lunch, about whether you've received kind of many kind of complaints, perhaps complaints not the right word, but in relation to the infectious disease provisions under the Burgundy Book and the Green Book. So we did find in the pandemic, a lot of unions are pushing quite hard that if an employee had COVID, this was an infectious disease, and therefore it should be kind of treated in accordance with those provisions under the Burgundy Book and the Green Book. So in relation to teachers, I think if a medical practitioner attests that there was a reasonable probability that COVID-19 was caught in the workplace, it should be treated as an infectious disease, and so they get full pay entitlement, and any sickness absence relating to that does not count towards their usual sickness absence. And like slightly similar provisions for the Green Book, but kind of as we've seen from the previous slide, we do seem to be moving away from viewing COVID-19 as an infectious disease. It's kind of almost being downgraded to a kind of flu-like status. Will the unions continue to push this? I'm not quite sure. I think we're going to see employers kind of treating COVID as just a normal sickness. It's possible we may have received some pushback from that, but kind of like I said earlier, I'd be really interested to kind of speak with you all about your experiences there. Just a quick note on section 44, claims under the Employment Rights Act. So this really came into focus during the pandemic. Employment lawyers hadn't really taken much notice of it until then. And basically, employees under this section are protected from a detriment or dismissal if they reasonably believe that they are in serious and imminent danger in the workplace, and they therefore kind of cannot attend the workplace, so they have to avert that danger. And myself, in my own practice, I haven't seen many of these claims. I haven't seen this argued much, but there has been a recent Employment Appeal Tribunal case where an employee claimed that he was automatically unfair dismissed. Basically, this was at the start of the pandemic, and he said, "I'm not coming into work anymore. I'm in a serious and imminent danger. No way." He was off sick for a bit, and then he didn't turn up for a month, and his employer just dismissed him. He had less than 2 years service, but when it relates to a section 44 claim, they have a right not to be automatically unfair dismissed. So the continuous service of 2 years doesn't apply. So technically you have kind of that protection on day one that you start employment. He wasn't successful in his claim. There were kind of various reasons behind this. Kind of one of them, he basically wasn't able to prove that he reasonably believed he was in serious and imminent danger. And I think that's kind of how he acted in his personal life. So he wasn't going into work, but it was found that he was actually working in a pub. He was kind of seeing friends, doing lots of stuff. So it's like, well, you can also catch COVID there. So that claim failed, but the tribunal did make an interesting point that a pandemic could be viewed as a danger. And so it is still very possible that these claims could be successful, kind of depending on the facts and circumstances. So still kind of be mindful of this. If you have an employee who is saying, "I'm too scared to come into the workplace because of COVID," do kind of really treat that with caution, because there is a risk for kind of these claims. So kind of always get legal advice if kind of they start saying that. So next slide is on long COVID. So the Equality and Human Rights Commission recently published a statement on long COVID, and they have basically confirmed their view that they think that long COVID kind of could amount to a disability under the Equality Act. That doesn't mean in all cases that someone with long COVID will have a disability, but it is kind of possible that they would. So you can kind of see on the screen there, so an estimated 1.8 million people at the moment are living with long COVID, and 67% of those people are reporting that their symptoms are affecting their day-to-day activities. Now, in order to kind of be disabled under the Equality Act and therefore be protected by the provisions in the Equality Act from discrimination, harassment, victimisation, a disability is defined as a physical or mental impairment which has a substantial and long-term adverse effect on their ability to carry out their normal day-to-day activities. So it all kind of boils down to the facts, basically, that person's particular medical condition, kind of do they meet that definition of a disability? And that is something that the Employment Tribunal would consider. So I think kind of the key point here is to approach those employees with caution. You don't want to kind of inadvertently discriminate against them. So we've kind of been suggesting kind of treat long COVID as a disability as you would ordinarily, because you kind of want to minimise the risk of any Equality Act claims, because obviously as soon as an Employment Tribunal claim is issued, it's extremely costly, lengthy, a lot of management time is involved. So kind of approach with kind of caution and act as carefully as you can in order to kind of minimise the risks of those claims. So my next slide is on safeguarding some of the challenges that we're noticing at the moment. So I'm going to speak a bit about low-level concerns. So I believe that these were kind of introduced in Keeping Children Safe in Education's guidance last year. So the guidance is that you record these in writing and they are retained on file until the employee ends their employment. And the purpose really is to kind of identify patterns of concerning behaviour. And I think kind of the key point here is to make sure that you have a policy on low-level concerns, kind of who's recording these, how are they recorded, who's reviewing them, and kind of what happens if you do establish a pattern of behaviour, how is that dealt with? So it's very important to kind of make sure that you've got a policy in place, and it may also be appropriate to update your other policies. So for example, your safeguarding policy, and kind of make sure that your employees are aware that these policies are in place. Quick note on LADO referrals, just a kind of reminder that they're an advisory body, and so, you know, as the employer, ultimately it is your decision on kind of how you approach these types of matters. So obviously the kind of key risk here are employment tribunal claims, so you may kind of decide to dismiss an employee kind of based on LADO's advice. You just have to remember that you have to have a fair reason to dismiss, and you need to follow a fair procedure, particularly with employees who have over 2 years continuous service, because otherwise there is a risk that they will bring that claim against you in the employment tribunal. So very important to try and minimise the risks of those claims. I'll just quickly touch on police involvement. So sometimes obviously we do have employees who are subject to criminal investigations. That can be very tricky and complicated. These investigations can be very lengthy, and often it may be kind of appropriate for this employee to be suspended on full pay during this time. You then kind of need to consider, is this an appropriate way to kind of continue? Can we keep this person in employment for this long? Can we continue to pay them full pay for this long? Kind of what happens if they are charged with what they're accused of? Is there reputational damage here to the trust? All kind of really important factors to consider. And it will very much kind of depend on the facts and circumstances, but sometimes it may be appropriate to dismiss before it even reaches that stage. So thinking about public money, reputational damage, and also kind of the relationship of trust and confidence between the parties. And just a last point to note, so obviously we'll probably be aware of the child queue case, which has been widely reported in the media. Just a kind of reminder to revisit any policies that you have in relation to kind of external organisations coming into the school, and kind of who is in charge with this policy, kind of what is the procedure in place, kind of make sure that all staff in schools are aware of that. This slide's just on a brief update on the school bill and changes proposed to the TRA misconduct regime. So the government is proposing to make some changes here. They're listed on the slide. So the first one is to broaden the scope of the regime to basically include persons who commit misconduct when they're not employed as a teacher, but who have any time carried out teaching work. So obviously there is a risk that they will come back into the profession. And so I think this kind of covers teachers on career breaks of those types of people. The next reform is to broaden the scope of the regime to include a wider range of education settings. So I think this covers further education colleges and post-16 academies. So just so the duty to kind of consider to make a TRA referral will also apply to them. And the final reform is to enable the Secretary of State to consider referrals of serious teacher misconduct, regardless of how the matter comes to their attention. So at the moment, employers can make referrals, as can members of the public, the police and the DBS. DfE officials cannot make referrals to the Secretary of State. And in the consultation document, they do give a specific example of a DfE official who has kind of uncovered misconduct in their normal day-to-day activities. So I think this is kind of the key focus here, to basically give them the power to make a referral to the Secretary of State in those circumstances. And my final slide is on fire and rehire. So the government has announced a new statutory code, and as we all know, kind of this is under a lot of scrutiny at the moment. It's received a lot of media attention, particularly with the recent P&O saga. So they're going to be introducing a new statutory code. This will basically kind of provide practical guidance and support for employers if they are considering kind of implementing fire and rehire and kind of on how to change employees' terms and conditions of employment. It's likely that if an employer was found to have unreasonably failed to follow this code, that there would be a risk that the employment tribunal could apply an uplift to any compensation awarded in the employment tribunal. This is very similar, pretty much mirrors the power that they already have in relation to following the ACAS code. So if you go into the employment tribunal and an employee is successful, let's say for unfair dismissal, the tribunal finds that the employer has unreasonably failed to follow the ACAS code, they have the power to award up to a 25% uplift on any compensation, which can obviously be significant. So it will be very important for employers to ensure that they follow this guidance. There is already guidance which has been issued by ACAS. This is not statutory, but this basically kind of covers support for employers who are thinking about kind of changing employees' terms and conditions. How do they go about doing this, kind of consultations, and just reiterates that kind of the use of fire and rehire is very much a last resort. It's kind of just worth noting that fire and rehire can be used lawfully in some circumstances. And so the key thing that you kind of have to focus on is, why are we making these changes to our employees' terms and conditions? Kind of what is the business reason? What is our business case? Because if they were to issue a claim for unfair dismissal, you need to show that you had a fair reason, so that a reasonable employer would consider that your business reason for pushing through those changes was sound, and that you've also followed a fair procedure. So have you consulted? Have you engaged in a meaningful consultation with employees? So it's kind of very important to make sure that you're following the guidance out there to kind of minimise the risks of those claims. That's everything from me. Thank you very much for listening. Does anyone have any immediate questions they want to ask now, or we can wait for the break?
You mentioned about low-level concerns versus employment law. Keeping children safe in education 22 is coming up for this September. Suggests that we Google search and look at the social media accounts of prospective employees before we invite them to interview.
It's not a bad idea.
It's not a bad idea, but then can you be charged with discrimination by that applicant?
I think
if
it
you
would
find something that you don't think fits with the values of your school, but they would then say, well, you're discriminating against me, you haven't even met me yet.
Yeah, I think it would really depend, because under the Equality Act, there are protected characteristics. So you can only discriminate against someone kind of on the basis of their protected characteristics, so kind of age, sex, race, marriage is one of them, disability. So if you find something like, oh, you're drinking quite heavily in that photo, like, oh, you don't, you know, you've done something a bit inappropriate there. If it's not related to a protected characteristic, then I don't think there is a kind of a high risk of a claim there. Obviously, they may well kind of be upset about that, but I think, yeah, as long as, I think you just need to be careful that you're not kind of offering them the role because of a protected characteristic. So that's the kind of the key focus there. So if, yeah, you find something that isn't appropriate but isn't related to a protected characteristic at all, then I think it is fine to kind of rely on that as one of your excuses at that point. Any more questions? No? Thank you very much.